Hello everybody and welcome to another amazing video of DIY investing. For today's video, we're going to be mapping out whether the top is in for Bitcoin, and if it is, where are we going to be headed in the short term. This is going to brush up on some of my points that I talked about in my last video. There is still a possibility that we could be going higher. You guys know that my target of 27K has yet to be hit. We're going to be mapping out all of these different moves that are going to be happening, talking about the short term, talking about the long term, so that we can stay best prepared for the move that's going to be happening over the next couple months. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, now here we are to start off today's video, and I think it's very important that you guys pay attention to what I'm about to talk about. In my last video, what we talked about was three different potentials. Potential one was that the top is in at 25,500. We don't break above the range highs, and we start a multi-month correction back down. Option two was we rally upwards of my target at 27K and then start the multi-month correction back down. Option three was that we overextend and rally all the way upwards of 30 to 32,000 and then start the multi-month correction. As you guys know, the one constant in all three of these different strategies was the fact that we're expecting a multi-month correction. And so as it stands, guys, we've pulled back from the range highs and we're back within wave 3 market structure as indicated right here. We know for a fact that we've already finished wave 1. We know for a fact we've already finished wave 3 and wave 4. And the question has been whether wave 5 is going to end right here or whether we're going to extend a little bit higher. And as it stands right now, the idea that we're going to be going much higher is starting to get more and more sketchy. And the reason I say that is because of the fact we weren't able to actually break out of the range highs in August. We've pulled back within previous wave 3 market structure. And so I want you guys to proceed with caution. If you've made a bunch of profit by following anything that I talked about and you're now seeing the market starting to pull back, I would recommend that at least taking some profit is a good strategy. And understand, guys, that if you don't trust yourself with trying to trade the short-term moves over the next few months, it's not necessarily a bad idea to hold for the long term. If you've already set it in your mind that you're going to be holding for the next 2 to 3 years without taking profit, by all means, continue to stick to that trading plan. But in my opinion, the risk is getting very much high because of the fact we've already finished all of our subwaves that we needed to see. We've already finished all the major waves that we needed to see as well. The question is whether the top is here or whether we're going to extend a little bit higher. But the fact of the matter, guys, because of the fact we've actually closed back within the highs of wave 3, and most importantly, we sold below those and then we retested those as resistance most recently. We've pulled back from that point. There's getting to be a very real possibility that this top could already be in and we're about to start a much deeper correction on the way back down. Now keep in mind, guys, that this is a doji. We don't have any confirmation yet. Even though we are back within this previous structure of wave 3, it's not like it's guaranteed to go down lower. We don't really know. We're in the in-between stage where technically this could be a retest of this wave 3 and we're about to start a higher move. But if that's the case, what we absolutely have to see is this reclaim the highs of around 24,000, hold support, and then in my opinion that could be setting us in for a higher move. But if that's the case, what we'd be looking at here is this entire move from 21.5 all the way up to the range highs of August. This would be a subwave of wave 5. This would be one of 5, and what we'd be looking at here is most likely an extended wave 5 upwards of about $31,000 to $32,000. That is the bullish scenario here, which if this is a bullish scenario, it's a very bullish scenario at that. But what I like to keep you guys in the wakes of is the fact that what I've always told you has been the best thing to do is capture the majority of the move. If you were following me all the way back down in here, what I made very clear was that you're better off taking buying actions down here than you are waiting for one more lower low to 12K or 10K. And the reason I said that is because I believe that with the 4-year cycles flashing a buy signal, it's no point in betting against that trend when you're much better off buying right here. Even if we saw the drop to 10K, the risk to reward was in favor of the bulls because this was basically an 80% correction from the highs of where we topped at 69,000. And so the same rule is applied right here. If you guys watched my last video, what we talked about was the potential where we end up topping right here, and this is already the end of our wave 5. And that reason I bring this stuff up to you guys is because if you've made profit from buying down in here, Now the risk is starting to grow much higher. The fact of the matter is we have retraced below the range highs of, our wave 3 highs, and now we've actually rejected off of them. We don't have confirmation because this is a doji, but there is a very real possibility that the top could already be in. And if that's the case, what we'd be looking at is a much deeper correction on the way back down. If we pull up our Fibonacci, this is what we talked about in my last video. If you haven't watched that, go back and watch it because it's going to summarize basically what I'm explaining right here. Now, what our target is a 618. Now, the big thing, like I've stated, is we're expecting a multi-month cycle top. The question was whether that starts here or whether we end up hitting upwards of my targets, 27K, or whether we overextend and go to 30K. That was yet to be determined. But now that we've pulled back, there is a very real possibility that the wave 5 could already be in. We aren't going to actually clear the range highs of August. And if that's the case and you're sitting on a decent amount of profit buying something that took off in a big way, I don't think that it's a bad time to be selling and at least realizing some of those gains. I've actually gone ahead and taken some profits on some altcoins that I made a lot of profit off of. I haven't sold all of them by any means, and by all of them I mean 100% of my initial investment. I've just taken some off the top that I'm looking to, target reaccumulation. If in fact this is the top and we start going lower, I felt like the risk to reward was, not in my favor by trying to hold and nail the exact top, even if in fact we end up rallying upwards of higher price targets. Because my thesis has always been, look to compound and look to capture the majority of the move. I was accumulating down here in this period. So now that we've already rallied all the way up and we have the potential that we've already finished wave 5 on the upside being this move right here, I figured that I might as well at least lock up some of those long-term profits, look to buy on a dip that comes, because no matter whether we top here or go up a little bit higher, I still expect a multi-month correction to take us back down to the 618. The question is, where is the 618 going to be? If we end up making one more high to 27K, the 618 is going to be 19,000, just under 20K. If we rally all the way upwards of 30K, our 618 is going to be around $21,000. But no matter what, we're still looking at a pretty decent drop from, the highs of wherever we're going to be going at. And so that's why I say that locking up at least some profit right here isn't a bad strategy. And I honestly think that one of the worst things that we do for ourselves is the fact that we think in our heads that we're going to nail the exact top. We get too greedy in, trying to make as much profit as possible. But we've had a very big move off of the lows, and we're sitting at resistance. We're sitting at resistance while already being inside of a wave 5. So the only real bullish scenario that we have is that this is an extended wave 5, and we're going to be working on something like this, rallying all the way upwards of $30, $31, even $32,000. And so I would love for this scenario, because keep in mind, guys, even though I've taken some profit, if we end up going higher, I'm still holding a lot of those positions that I accumulated. I haven't sold 100% of anything. So if we end up making an extended wave 5, I'm not going to be sad by any means. I'm going to be looking to take a lot more profits during this next move, if in fact that is the next move coming. But I say that most likely it's not, because we have kind of, sold back down from the resistance. We do already have the potential that this was our wave 5, and now we've actually rejected from the highs of wave 3. Keep in mind that this isn't confirmation because it's a doji, but the risk is definitely there. And so I bring this up as somebody who's made a lot of different altcoin plays that played out in a big way, made a lot of profit. I felt like it was better off for me to take some of those profits, realize some of that gain, and simply look to target downside even if I'm wrong and we go up higher. I don't know if my target of 27K is going to get hit because of the fact we have pulled back from the range highs. Now, with that being said, there is still the possibility that this could be a major extended wave 5, and if that's the case, I'm still holding a lot, and I'm going to be still looking to realize more of those gains if in fact that's the case. But I want you guys to at least be aware of the downside risk, because if we do start that top, and this is the top of wave 5 and we're about to start a multi-month correction, we're going to be looking at something along the lines of this. A correction back down to about $21,500. We might bounce back up to these range highs again, but regardless, in my opinion, we're coming all the way back down to around $20,000, because that's going to be our 618, is pretty much $19,500. Our 618, if in fact we've topped right here at $25,000, is going to be about just under $20,000. It's actually the low $19,000. $19,200 would be the 618 target. And that's kind of what I've been watching for. Really what we'd be looking at after every single Elliott wave impulse, what you're going to see is a typical ABC correction. Corrections can vary. You can have different types of corrections, but as a rule, what you're going to be typical to see is a ABC correction. So we've seen wave 1, we've seen wave 3, and we saw wave 5. If this is the top, we'd be looking at a bigger ABC on the way back down. And this ABC would be a remarkable buying opportunity for anybody that made profit on the way back up. And so if your trading plan is just to hold long term, obviously ignore what I'm saying, but at least understand that in this period of time, if we do see a top and we start an ABC correction back down, that would be a good opportunity to take any extra cash, anything that you've been sitting on, and re-enter inside of that sell-off. For people that want to actually lock up some profit, I don't think it's a bad time to do so. Even if in fact we do go higher, just remember that and keep a little bit that you're holding if in fact we end up making a bigger move upwards of 30K. Because if this is a subwave, we're going to extend past my $27,000 target. In my opinion, we'd go straight to about, pretty much 28,000 to 29,000. There shouldn't be any resistance left, because if you guys see here, we really don't have any major resistance throughout this entirety of this, range. It would pretty much teleport straight to $28,500 to $30,000. And that's kind of what I would expect if we can clear the range highs. But I do see the very real possibility that the top is already in here. We've already finished 5 waves up. And if that's the case, we're going to be looking for an ABC correction back down to this 618. Because it's just the most obvious scenario here. If we go over to the total market cap, this is going to be, pretty much explaining the same thing. But the reason I bring up the total market cap is because this obeys certain levels a little bit more symmetrically than what we see over on the dollar chart. There's less volatility on the total market cap for whatever reason. I think a lot of it just has to do with there's more volatility inside of the normal markets, being the dollar, being Bitcoin, whereas this is just kind of a volume chart. Now, inside of this chart, we do see the possibility, once again, that we've already finished 5 waves up. This could already be the top of wave 5. Whether we get an extended wave 5 or not, I don't think that matters so much. If it does, and that's what the market does, simply just have some that you're holding long term. Keep enough of your position that you don't care if we start selling off now. Lock up enough profit that if we do start a multi-month correction, you're not caught off guard by that move. Now, if this is the case, once again, what we'd be looking at is a move to the 618. And the 618 is going to be pretty much in between this range. This was the range high. This was the range support that we held after the June capitulation. We sat off of this level a number of different times reacting to it, and it just makes the most sense to me that if the top's in, this is the level that we're going to be coming back down to. And it's possible that even if we extend higher and we rally upwards of like this, it's possible that we could still end up coming back down to this range, and we would end up dropping below the 618 and going to the 786. The big thing that we need to remember here, guys, is the fact that inside of a new beginning of a trend, if there's been a period of resistance, which in this case, this was support, it became resistance once we broke down from the FTX collapse, it makes sense that the market is going to come back down and retest that level. Because here's the thing, this was the resistance right here. Once we flipped it, we never really had a pullback to reaccumulate off of this range. We flipped it all the way up here, and then we pretty much were maintaining higher highs and higher lows all the way throughout this period. So if this is the top, we would expect us to come back down and bang this level at least one time, truly cement that the bottom is going to be in, and then we could start the next move up. Because here's the thing, even though, we'd be looking at a cycle top where we're at, a deeper correction on the way back down, this would prove that the bear market is over, because we would make our first confirmed support and resistance flip in the new cycle. Because we really haven't had that. We've had this big breakout on the way back up, but we never have truly cemented that the bear market is over. And the only way that we can genuinely do that, although I do believe the bear market is over, I think that the true confirmation for every single person, for the institutions, for the people that are a lot more risk adverse, would be for us to come back down, retest this major support range that we were at for so long, cement that the bottom is in by flipping it as support, and then we would start the much bigger move to the upside. And if that's the case, you guys want to at least have some cash on the sidelines to be able to buy that dip. And that's what I think is the important thing to be talking about right now. If we come back over and look at Bitcoin and we go to the weekly time frame, the thing that we need to be aware of is the fact that we do have this very real possibility of bearish divergence, and this is happening on multiple different indicators. The RSI oftentimes gives us good bearish divergence signals divergence of any kind for that matter. But the OBV, in my opinion, is an even better metric, and it's more, it gives you more confirmation than the RSI. The RSI can give you false signals, whereas the OBV is generally going to give you a much clearer signal. And so combined, they both give a really strong direction of the momentum of the market. And so the fact of the matter here is what we're looking at is a retest of the supply of August. We've retested the August supply, and we do have bearish divergence forming after the retest of the August supply. And so it is possible we go up higher, this ends up breaking out for one more high. But the fact is, guys, in my opinion, the risk is definitely not on the bull side. If you're somebody that's made good profit throughout here, at least locking up some of that is a good strategy, because we do have the early signals telling us that this is going to end up correcting. And so if that's the case, if we end up correcting back down, making this a big drop and confirming, let's make that a little straighter, confirming that this is actually confirming that this bullish trend is over for the short term, it's better off to at least have some of that profit locked up so that you can compound those gains, compound those positions that you were buying at the cycle low. Because a lot of altcoins, if Bitcoin pulls back from where we're at today, not even talking about the range highs, if Bitcoin pulls back to around 19.2, you're looking at almost a 20% drop. If Bitcoin pulls back 20%, you're looking at like a 35% drop in altcoins. And so that would be a huge discount to be able to compound on a lot of those different plays. And so I bring this, guys, to your awareness just because of the fact, in my opinion, the risk is definitely real that we could be experiencing a much deeper sell-off. And one of the things that we can look at here is the SPX. Now, the SPX hasn't gotten any sort of confirmation. This thing could go higher, and if that's the case, then we're going to end up seeing Bitcoin most likely go up a little bit higher. But it's not like we 100% have to follow the SPX. We've seen variances inside of this consolidation. But the big thing talking about the SPX is the fact that this could be a very real support and resistance flip on top of our descending resistance of our bearish market. This was our bearish trend throughout the entirety since January of the beginning of 2022. And we have corrected, and we pretty much have retested this level as a potential of support. And so if that's the case, and we hold support right here, we make a much bigger move to the upside, do something like this, we'd be looking at a bigger move to the upside, taking us all the way upwards of about 4,300. And if that's the case, we would expect Bitcoin to go up a little bit higher. So that's why I say that there is a possibility that if Bitcoin ends up, breaking out again, this move right here could be a subwave, wave 1 of 5, and we could be looking at wave 3 coming in. Subwave 1, subwave 3, subwave 5, something like this. And if that's an extended fifth like this, it would be a huge opportunity for profit taking in that move. But if that's not the case and we start the top already, I just want you guys to be aware that you're better off at least locking up some profit. Even if this ends up breaking out higher, the best scenario is simply to lock up some profit, keep a little bag that you're going to be looking to use to compound those gains when the top really comes. And if we're wrong about that top and we make one more extended wave 5 and do something like this, keep enough that you're ready to take more profit, keep enough that you're okay with sacrificing, taking some profit down here, and just simply look to be targeting for a much bigger move, because this is really the only scenario that I see fit at this point. We're either going to make an extended wave 5, rallying all the way upwards of about $30,000 to $32,000, overextending past my initial target at 27K, or the top is already in, we've already finished 5 waves up, and we're about to start a deeper correction back down to retest this entire consolidation range that we were at for 5 or 6 months leading into the FTX collapse. And so this is the strategy that I see fit. This is how I'm personally playing the market. If you guys want to be able to follow what altcoins I'm taking profits on, what altcoins I'm actually looking to re-enter on this dip that I foresee coming very soon, if that's the case and you guys want to see every single thing that I'm doing inside of my trading plan, links are in the description to go ahead and sign up on my website. You guys can actually follow all the trades that I take. If I post anything in my trading plan, new altcoins that I'm holding for the long term, altcoins I'm taking profits on, altcoins I'm looking to buy the dip on, reaccumulating, compounding those gains. The only way to do that is to be able to follow me inside of my Discord. I have taken some profits, I have taken some long-term profits, and if that's the case and you want to know what those are and you want to see, what I'm going to be looking to re-enter on in this coming dip, now is the time more than ever to be doing that, because if we do end up stitching in a cycle top, it's important to understand where I'm taking profits, what I'm taking profits on, and if we end up making one more impulse upwards of $30,000 to $32,000, once again, it's important to look at where I'm actually going to be looking to take profits, what I'm taking profits on, and where I'm going to be looking to rebuy that dip. Because if we end up making one more impulse to $30,000, the targets for where I'm going to be looking to re-enter are going to change because the market will be up a little bit higher. So just keep that in mind. If you guys want to follow all of that, links are in the description. Lifetime access, one-time fee. I look forward to seeing you guys in there. And with that being said, I'll catch you in the next one. As always, peace out.